So you levered up your Bitcoin, right, to crazy amounts. The price goes down. Either make the margin call or you don't. If you don't, they seize the collateral. Summertime conversation, we were down, close to 50% from, maybe right around 50% from the peak in February. And that February peak was really induced by leverage, right? There was a lot of leverage in the system. Now there's a lot of leverage everywhere. There's a lot of leverage in real estate. There's a lot of leverage in the stock market. In fact, still way too much leverage in the stock market. But there was a lot of leverage in crypto. And, I shouldn't rat out a family member. Actually, I won't rat out a family member, but I have a family member who called me up around this time. He's like, they stole my Bitcoin. I'm like, what are you talking about? He's like, well, I was at Bitfinex. I go, stop. Okay. So you levered up your Bitcoin, right, to crazy amounts. The price goes down. Either make the margin call or you don't. If you don't, they seize the collateral. That's not stealing. Now, if the business model of the firm is to entice people to lever up to get speculative returns, then maybe we could argue whether it's stealing or not. But the bottom line is there was too much leverage. And I remember the conversation was, it's likely that we had seen kind of an intermediate bottom and that we'd have another kind of recovery because we didn't get all the leverage out of the system. And one of the worst things in investing is, if it's a 2x2 matrix, good decision, good outcome, good decision, bad outcome, bad decision, good outcome, and bad decision, bad outcome, right? Bad decisions, bad outcomes, they're great. They teach you, don't do that again. The worst thing that can happen is a bad decision with a good outcome. So you make a bad decision. You buy something silly, you buy something on leverage, you gamble on something, and it works out. And it makes you think you're smart. And then you do it again. Then you get the bad decision, bad outcome. And so I do think that peak we saw in November, where everybody was, laser eyes till 100K and we're going to the moon. And you had people, I love a lot of the gang out there that are, banging the gong. I never put them on. That's not true. I did the whatever you do, the Photoshop to put them on, and I posted it and I looked at it and it's stupid. And I don't mean stupid like I just thought I looked stupid. So I didn't like it. So I didn't do it. Not for me. But I think the concept is fine. Getting a group together and identifying, it looks like we're in a polo shirt, right? I mean, you wear things that identify you to a group. Usually more like country club, or a Seahawk logo. Like I love I'm very distressed. My Seahawk hat disappeared.
Oh, wow. Yeah.
So my wife did just order me a new one. But yeah, I don't know what to do if I don't have my Seahawk hat on. So what happened was you had this rebound rally and people were over ebullient and that leverage came back in. And I think what people missed was, I talk about this lately, that, there's the Gandhi quote that I guess Gandhi actually didn't say, that everybody thinks Gandhi said, but some other guy who I should remember who that was, but that, first they ignore you, then they laugh at you, then they fight you, then you win. And 2009 to 15 was the first they ignored you phase, right? A bunch of nerds and geeks talking about crypto. Who cares? Just go away. It's whatever, magic internet money. Then they laugh at you. So 2016 to 21, it's like, ha, 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 a bunch of nerds and geeks playing with their magic internet money. Who cares? But now then they fight you. And starting November of last year, the financial services industry declared war on crypto, and particularly Bitcoin. Because what they did is, by not approving the spot ETF and approving a futures ETF, what it did is suddenly everyone's demanding futures. Well, if somebody's long futures, someone else is short futures. So it allowed the big institutions, the big banks, the BlackRocks, et cetera, to go short futures. And when you can short paper out of thin air, that puts really bad pressure on any asset. So you've seen this in gold, you've seen it in oil, you've seen it in gas, you've seen it in anything where you can create paper goods. Like in the old days, if I wanted to trade oil with you, Daryl, I actually had to have a barrel of oil. You had to give me money. I actually had to deliver a physical barrel of oil. Well, in the futures market, I could just sell you a magical paper barrel of oil. And as long as we set up the contract before I'm supposed to deliver, then I don't actually have to physically go get oil. But those markets get out of whack and they get out of balance and they tend to cause peaks and troughs. And so, the most recent decline from 69,000 all the way down to 17.5 was the result of the unwinding of that excess leverage and the relentless downward pressure from the futures market. Daryl, it's unbelievable. I mean, let's just pick on a couple. So, I'll pull one up here, Shopify. Okay. Perfectly fine company. All right. This thing ran from $11, right, at the beginning of 2019, all the way to $176. Now, here's the problem: it's not the price. The price is one thing. The problem is this is a company that got to a market cap. So let's see, they did 2019. Let's do 20. So 2020, they did $3 billion in revenue. Made a tiny fraction of money. But they did $3 billion in revenue. But their market cap at the peak was about $300 billion. Right? So you're talking about 100 times revenues. There's no company on the planet, not one, that should actually sell above 10 times revenues. I mean, why am I blanking on his name? But not Steve Jobs, but the head of Sun Microsystems. It'll come to me. But in 2000, during the first tech bubble, he said, look, my stock's now trading at 10 times revenues. The problem with that is for you to earn a 15% return, I would basically have to give you all of the revenue for the next 10 years, which is kind of problematic because I would go to jail because I have to pay taxes, I have to pay my employees, I have to reinvest in equipment. And so that's impossible. And then Sun Microsystems went down 98%. And 4%, in the craziness of 2000, 4% of companies sold above 10 times revenues. In the most recent tech bubble, tech bubble 2.0, 15%, almost 4 times more companies sold above 10 times revenues. And there were some like Zoom, like Shopify, and a handful of others that were 100 times or more. And so buying those companies at those levels was foolish. Buying them at 10 times is foolish. 20 times is more foolish. At 100 times, it's just flat stupid. But the problem is if you bought it at 50 times and it doubled and went to 100 times, you're feeling, oh, I'm smart. I'm a good investor. No, you're a degenerate gambler that got lucky. And I still think, to your point, we're still far, far away. Not for every stock. And, Shopify's down, how much is it down in the last year? A lot, but let's figure out exactly how much. 1 year. So it's down 80% in the last year. The problem is it still trades at 10 times sales. So I could make an argument that it could go down 75% from here to get to fair value. Now, I'm not saying it will, but I'm saying it could. And there are other companies like Zoom, right? Great product. We're using it right now. It's a good product. But it was trading at 120 times revenues. It's down 90 some odd percent. Peloton, again, it was trading at silly levels because, you know, the funny thing about Peloton, it's kind of how I feel about Tesla. You know, Tesla's a car where you bolt it on an iPad. I think it's a fine car. It's good. Okay. But it's a car, right? It's not a piece of software. It's a car. And most of the time it sits empty. You know, most of our cars sit empty 95% of the time. We're in them about 5% of the time. So it's a car. Peloton is an exercise bike with an iPad attached to it. Everybody says, I'm going to exercise. So they buy the exercise bike, and then it becomes a clothing rack. And then it gets sold to play it against sports. And so there are very few people who have the discipline to work out all the time. There are very few people who have the discipline to use a piece of equipment in their home because they just aren't that disciplined. So it's tough. And so that business